platforming moment where there's new applications that bring in a lot of non-traditional crypto users, because the thing that's going to drive crypto above and beyond just the cryptoites is it's not, yes, it does concern me, but it doesn't diminish my bullishness on crypto. If you go back over the last few years, let's just go back 2020, we saw the DeFi summer, and that brought a lot of new people in, and it created a lot of applications that, particularly for Ethereum and some L2s, that really got people involved and brought people to the table for Ethereum in particular. And those applications make total sense. You go on Aave and you put some money in, you deposit, you borrow, it takes 30 seconds. You need to pull out some USDC to go pay a credit card bill. Now you can do that, right? So DeFi went from being something new that brought a lot of people in. People were using their stimulus checks. Rates were really high back then. You could yield farm, and it was crazy as everybody was figuring it out. You had a lot of investor money coming in subsidizing yields, and so you really had you had this groundswell of people coming to crypto, and that was great. It was a unique application that really put people to work. Then you saw the same thing with NFTs. People started collecting them, whether it was on Flow with Top Shot, or it was on Ethereum with punks, or whatever, Bored Apes, whatever it may be, and everything and anything was being created, and everything sold at the beginning, right? But and that brought in a ton of people, still brought in a ton of people. So you had NFTs as a cool application that led to utilization. Because the thing about crypto that I think people sometimes fail to realize is you need users in order for people to buy and use the Ethereum or whatever it may be, right, to generate gas fees. Because if gas fees aren't being generated, or application fees aren't being generated, there's no real business there. And at the end of the day, it's still a real business that has to sustain itself. We've seen prices drop significantly, and they've popped up some recently. Who knows if that's just a bear market rebound and it's just temporary? I don't know. You can only guess. But what concerns me is the fact that there's not the next application, right? We went from DeFi to collectibles. Now what? And rather than seeing true innovation, you're seeing replication, where, okay, I'm moving DeFi to this blockchain or that blockchain. Oh, I'm trying to find value on the edges. I'm going to create an AI-based application that looks for the best yields across all the different DeFi platforms, and I'm going to automate that for people. It's not something that is groundbreaking. It's just an improvement on what's already being done, and that's not going to be enough to bring people back to crypto. So, it really is going to take that next big thing to really drive utilization. That's my concern. I've said this before, we saw the same thing with the internet. Streaming, bam, it's fun. New websites, bam, it's fun. Amazon, you're buying, bam, it's fun. And then, everything kind of cratered in 2000 and 2001, and there were no BAMs for a long time. There wasn't shit happening for a few years. And then, in 2004, you saw Facebook and social networks hit, and then you saw app stores hit, when in 2007, when the iPhone came out. So we're looking for that App Store iPhone, platforming moment where there's new applications that bring in a lot of non-traditional crypto users. Because the thing that's going to drive crypto above and beyond just the cryptoites is something where you just have to use it. I'm never a big fan of raising hundreds of millions of dollars to do tens of millions in business, but that's exactly what happened in crypto. But crypto was distorted because people looked at the token valuations. And so what would happen is they go out and do a token sale and generate a bunch of capital, or even worse, they'd raise hundreds of millions of dollars from VCs and use that money to create a fake yield, right? We saw that with Anchor, right? Where it was like, okay, we're offering you 20%. And then they hope that they'd be able to generate enough loans to cover the 20%. Never came close. All that yield was subsidized. All those 5, 7, 8, 10, 20, 50, 90, 100% yields have always been subsidized by investors. Now with those investors not willing to subsidize anymore, you're not seeing the crazy yields. And you're not even seeing the inflationary yields from the blockchains anymore. You know, where you would say, okay, you know, if you stake this, we're gonna pay you 4% or 8% or 12%. And they can't even afford to do that because, you know, if you inflate too much, there's not enough intrinsic demand to cover that inflation, and your token price is going to drop, and that makes your investors mad, that makes your speculators mad, and it ignores the fact that to be a real business, you have to be a real business, and crypto doesn't change any of that. It's interesting. Obviously, it's great to go proof of stake from proof of work, right? For all the environmental reasons. Then with 1559, you're going to potentially have deflation, right? So that brings up an interesting corollary: inflation versus utilization. Because as utilization goes up and the value of a token goes up, then the cost to do something goes up. And so you have these two competing interests. Hey, I want to create an app that generates 1 million NFTs a day, right? Just picking something out of left field, right? I'm not saying there is one. Well, if the value of Ethereum keeps on going up because there's a deflationary spiral going on because of 1559, now all of a sudden, where's the equilibrium? If all of a sudden the price goes through the roof, like you saw that before, when you talk about high gas fees, it's a function of the price of Ethereum. That I don't know. I don't know. It comes down again, where Ethereum really becomes valuable again is when the applications are there. Because if you think about it, you know, there's no deflation if there's no applications use. Because 1559, it requires applications, and just buying Ethereum from somebody doesn't generate any of that. Depends on the applications. If there's a better search engine that's on Ethereum, whoever creates it gets it. You know, my thoughts on Cardano are the exact same as they are on Polygon and Ethereum. You know, business walks and it's just, there's got to be a there, right? And you can go to Coinmetrics, you can go to all these different places and look for transactions. And I guess the people in Africa are not using it as much as they expected to, because you don't see the transactions, you don't see the fees, you know, and the crypto, you know, I use cryptofees.info a lot, right? Just to get a sense of what's going on. It's just quick and easy. But I look at number of transactions, and to me, that's the bellwether of success. And, you know, now they can be distorted, and you've got to smooth it out because somebody comes in for a play to earn game. And let's talk about play to earn too at some point, because that's important right now. Because I think that's completely misunderstood and misapplied. But if someone comes in with one application, like on Polygon, you know, some play to earn games came in and they were subsidized by investors. Everybody dove in to try to get some of that money, and then they dove right back out. And so, you know, smoothing it out, I just don't see where Cardano has had much of an impact at all. You know, they got their smart contracts, what, a year ago? And that was going to be the inflection point. Inflect away, Cardano, you know, I just have not seen it. Now, that doesn't mean, look, you know, I talked about it for Ethereum, for Polygon. If the next great application that everybody wants to use is on Cardano and you have to buy ADA, go, you know, that's great. Right? The door is open for that to happen, but it hasn't happened yet. Just because it's crypto doesn't mean you don't need revenues. You know, there's this distortion in crypto called market cap. You know, you have a small, and it happens with some small stocks too. You have a small float, you get the price up enough, and you have, you know, a total number available from the treasury at $1 billion, and you make it a $10 token, and now you have a $10 billion total market cap. Now that's not a Cardano issue, but if you do enough staking and you have enough inflation and you can stake enough that people don't sell too much, you're going to have a big enough market cap to make it look good. Dogecoin's got a huge market cap. Shiba Inu's got a huge market cap. But there's no, I still think Doge has got more applications potentially available to it than Cardano. Now that'll be out there for sure, but that'll be your headline. But the opportunity for Cardano is greater until Doge really becomes a platform for applications. But you get my point, right? It still comes down, it's still a business. No matter what you do, no matter what you say, no matter how you position it, no matter what your market cap is, there has to be some there. And that's why Cardano, pushed for smart contracts, I'm guessing. That's why schools in Africa need Cardano, but it's just not there yet. I'm a fan of Klima, Klima DAO, right? Which used to be high cap. Now it's about a $30 million market cap. One of the applications that I think will work, or I hope will work, and I'll take a step back to explain why. Like a couple years ago, I went and bought some carbon offsets because I wanted to offset my personal and corporate carbon footprint. And it's a pain in the ass to go and do that, right? You have to go through a broker. You don't know what's real or not real. There is no real blockchain type scenario to verify everything that's easy. And then Klima came along and I invested purely because I think it's easier right now as we speak to buy a Klima token, an MCO token, a BCT token, and burn it and take the treasury back out, and take that as an offset, right? And they make it easy to do. Now you can look at it as an investment, and there's upside to it if this happens a lot. But the worst case, which is the way I also try to look at things, is worst case is I just burn them, and based off their treasury that I've burned, I've offset X amount of tons of carbon. And to me, that's a win no matter how you look at it. And so they're still early in the game. They've made some missteps, but I think that they've really gotten their act together. Like Polygon came in and bought a bunch, and as a result, offset their footprint for their proof of stake network. And I think more and more companies will do that. ETH has been my most successful by far, with Bitcoin right behind. I did really well with Helium, and I sold right at the top. I got lucky, And in terms of one I missed out on, none that I really wish, because I got in early enough that a lot of them were really cheap. I could take flyers, buying Polygon at under a penny, those types of things. So there hasn't really been one that I've truly missed out. Now I've timed some of them wrong. I lightened up on a bunch of stuff and on Ethereum and Bitcoin. So I lightened up, and some I got out really well, and some I sold lower than where it is now, but that's okay.